This is Shane Wilson, and in today's video, I'm going to cover how, if you are a seller, how is the interest rates going up, the inflation in the news, the mortgage rates going up. You see all of this, and if you're considering selling your house, this video is going to be about how those Fed rates going up affect you as a seller. How does it affect you if you're considering putting your house on the market within the next 3, 6, 9 months? What should you be on the lookout for? How could this affect you? In this video, let's cover it. So first off, as you know, we are in an inflationary market. There is inflation. There is no argument about that. That is a fact. Anything I put out in my videos, I try to put out fact and information that you can use. I am not about predicting. Everyone has predictions. Predictions are useless, absolutely useless to predict. What you need is the knowledge and the skill set to navigate the seas that we're in. And if the winds change, if the market changes, how do you navigate that? That is what I'm going to give you. So we're in the inflationary market. Fed is raising the rates, undisputed. When the Fed raise the rates, this correlates that mortgage rates are generally going to go up because the mortgage rates are tied as a correlation to the Fed rates, as they are also tied to the Treasury bonds, right? So they're going to go up. Undisputable facts. We've seen that. In fact, the rate's over 5% in a lot of cases. And this is way ahead of schedule because originally the Mortgage Brokers Association predicted that we'd only be 5% by the end of the year. This video is in May. We are not at the end of the year. We're ahead of schedule on that. So what does this mean for you? We can extrapolate that probably over the next 3 to 4 months, rates are still going to go up. The Fed is continuing to raise the Federal Reserve rate. This is going to raise mortgage rates. How does this affect you if you're looking to put your house on the market and you're looking to sell your property? This could affect you in the fact that this may reduce the number of buyers in the marketplace. If this reduces the number of buyers in the marketplace, our buyers cannot afford to pay as much. This is going to reduce the number of overbids and overbidding that we've seen on the properties to date. So if you're a seller and you've been waiting to put your house on the market, you should not wait anymore. If you want to cash out, if you're an investor and you have multiple properties and you've been wanting to cash some of those properties out, now is the time to do so. Because if you wait, we're at the peak. There's probably no way to deny that we are at a peak right now. Because if rates are going up, the market has got to slow down somewhat. Now, to what degree? No idea. Again, this is where people make predictions. Predictions are useless. What you need is the tools to decide what to do going forward. If you want to go ahead and cash out for maximum value as a seller, now is the time. Put the house on the market, get your profit, and get in and get out. Because it's not going to be any better than this right now. Not for a while anyway. Because look, historically, how do you know I'm right? Look historically, the last inflationary cycle we had, the housing market slowed down, and when interest rates got extreme, talking over 10% for mortgage rates, the market came to a slam halt. And when it halted, sellers were hung and could not sell their properties. Now, will we reach that point? Will the market crash like everyone's saying? No idea, right? What we can extrapolate, it's not going to happen in the next 3 to 4 months. So if you're a seller, you're looking to sell your house, put it on the market, get your cash, and walk away. Now, if you're a seller and you're looking to buy another property, again, it's still difficult. So if you sell your property, you still got to find another property. You're still bidding against other buyers. The buyers is still in a competition because we still have limited supply. No matter what the rates are, the supply is still limited. So that's the argument on how things will play out. My advice is, if you're a seller, get your house on the market if you want to walk away. If otherwise, you're not in a hurry to sell and you just want to hang on to your property, that is always a fantastic and good strategy as well. Just hang on to your property and be okay with it. If you have no intentions of, or need to sell in the next 2 or 3 years, don't worry about it. Because values historically will go up anyway. Even if you bought in 2006 and you went through the housing crisis, if you held onto your property, you more than likely have gained equity. So holding long-term is never a bad strategy, but if you're looking to take some profits, you're going to maximize those profits by taking them now. So if you're a seller and you need to put your house on the market, get it on the market now. This is Shane Wilson. I have some free resources. If you're interested in making money in real estate, check those out in the description below. I'm going to have a lot of videos coming out. Stick with me. I think you'll like them. And it's a pleasure. If you're first time on this channel, please subscribe, hit the bells, all the notifications, and help grow my channel because I really want to put out some great content for you guys. This is Shane Wilson. I will talk to you later.